Hey, good morning, traders. Like my video if you get a chance. Comments below are appreciated if you're seeing something I'm not. Um, so I've been working a lot, so I haven't had really much time this week to look at and watch the markets. And what I got going on here, we had a 4 week digestion of value, and we've broken it out above that here on the NQs into a double topping situation, a weekly double topping situation, major resistance area here on the NQs early on this morning. So be very mindful of that. So, bottom line is, like I said, we are in a weekly time frame in a breakout situation, but into resistance this morning. So, and we have failed to break out of that resistance area. In fact, we've actually rejected it this morning, and that is rightfully so because we had a very bad Japanese auction earlier this week. Uh, Go over here to 30-year. This is from U.S. News talking about how the bid to cover ratio was the bid against the amount of securities on offer fell to 2.9, the worst since December 2023, and was down from 30.74 at the prior May. Okay, so the demand for the auctions uh, had it actually dropped even further than what we had last month. Okay, and remember, guys, next week we have a 20 and 30-year auction here in the U.S. And here we are, U.S. and Japan are some of the biggest, uh, most indebted countries in the world. So both of them are in the similar boat. Okay, and because there's so much volume needed to support the debt load in both of those our countries. So just be very mindful of that. Okay, and bottom line is there hasn't been panic going on because there was comments about the finance ministry said that they were going to pare back the long dated super long expectations arose that uh, the finance minister is considering reducing the sale of super long bonds. So bottom line is that's helping support the Japanese bond market. The idea that they may not be selling super long bonds as heavily as they otherwise thought they would. Okay, so be very mindful of that going forward here. We could be right on the cusp because we know all the bad data is about to hit from all the tariffs. Here in the next week and a half, 2 weeks. We're going to get some hardcore data to start hitting from all the uh, uh, tariff turmoil. So be very mindful of that going forward here. Okay. Other things are happening this morning, guys. So we do have at 8:30 here. Here we are. It's 8:13 in the morning right now. But we do have initial jobless claims coming out. So this is a new fresh read that's coming out this morning on this data set. So be very mindful here that when the raw data is more important. The raw new data is the most important, not the revised data. And that's actually what's hitting this morning. So be very mindful of that. And we're actually going to get a pretty good idea on this trade balance. Another little trick you guys might want to monitor in the future. Uh, right here on Financial Juice, you can use it other places. Secured overnight financing rate 4.28 versus 4.32. So I just want to point out, that in itself gives you a slight risk on belief in the markets whenever you see something like that. So be very mindful of that. And that's something to under the hood, you might want to keep in the back of your mind when you're trading. So it's another little takeaway of the markets. So that's basically the cost to borrow money between banks. Okay, and you don't want to be trading against rising costs between trading costs between banks. You want those trading costs between U.S. banks and foreign banks to be going down, to be a risk on, be trading risk on. So just another little tidbit to help you guys out. We do have GDP tomorrow, so that's the biggest data point of the week. Okay, so be very mindful of that. Okay, we are into yesterday's. uh, central pivot range here on the ESs this morning. So be very mindful of that. So you have to be very mindful. Uh, we're right, basically digesting this move up above right here. It's still a bullish pattern into resistance, into a double topping resistance area until it's not. But we are already into that central pivot range. Uh, we got defended. So basically, if we lose the pre-market lows, that's probably giving us a signal to short the markets. So let's keep a very close eye on that. See if we lose pre-market lows here in the markets. Okay. Uh, right now everything looks, you know, copacetic. Okay, so just be very mindful of that. Personally, I think we're probably not going to advance much higher here until those auctions come in next week. So be very mindful of that. Okay, right here we are losing. Yeah, this is showing, giving us a leading indicator. See, we came up, we back tested our trend line. We're rejecting this morning. We're below central pivot range low. So this is giving us a more bearish take on this morning's setup in the markets. So be very mindful of that. We are on the bearish side of this week's developing value. So be very mindful of that as well. A little bit more bearish here on the Russell at this price point. So some little takeaways to be going forward here. Let's go here and see what the leaderboard here is on the bond market this morning. Down here, let me go ahead and turn the watch list off and this off. And down here on the leaderboard, ZNs, ZS. So our bond markets are leading the charge on the volume this morning. That's what we would like to see, given the turmoil from the Japanese, situation there. And since, let me go over here on the bigger time frames on my other chart here. And as you can see here, we're into a resistance zone here on our ZNs. So we are risk on. So yields are coming down this morning on our 10-year bonds. And this could be window dressing before the auctions next week. So we have to be very mindful of that. So it could very well be window dressing for the auctions. But this suggests more of a risk on situation in the broader markets, the current situation here. So we got to see if we actually break out of that resistance. So bottom line is, since we're into this resistance zone, uh, you know, in theory, if this comes off and rallies back up into it again, it'd be a potential short in the ZNs because we haven't actually broken out of the range. So be very mindful of this. This is actually the shorting area for the ZNs going forward here. So be very, very, very mindful of that. I don't know if I got the ZVs drawn out or not. Next week, like I said, guys. So be very mindful of that. So we're trying to break out this morning of a prior swing high. Uh, our resistance is a little bit higher, suggesting that yields could even come down even more today. That could be a risk-on situation. So I got a lot of things here suggesting that they're going to try to use the bond markets to push, try to break the equity markets out today. So just be very mindful of that. The only takeaway I got, though, the Russell is showing the most relative weakness, and in my opinion, what the bonds doing, what they're doing, I would have liked to see more strength in Russell relative to what's going on in the bond market, and I'm not seeing that. So got a conflict going on here. Okay, guys, on our charts, and we'll go over here what's going on the main equities this morning. Futures watch list this morning. And this morning on volume, I mean, we don't have any of the big boys on the leaderboard this morning. So be very mindful of that. Google. Google's the only one on the leaderboard. Really don't like it myself. It can run, but I'm not a big fan of that. Actually, that looks like a back test from the underneath side. It could fail easily. Okay. Trend's still very much intact. Amazon. AMD. Okay, that's on the leaderboard. So got some strange things here on the leaderboard. CrowdStrike. What's it? No, that's CoreWeave. Okay, that's not CrowdStrike. Robinhood, rallying. Oh, Apple's on there too. Sorry to see that. Apple's kind of just stuck here in no man's land. Okay, that pretty much runs it up here, guys. I'm not particularly interested in the long side because we're into resistance, and the bonds they got way they got in position. They might be trying to break us out of resistance today. So um, I wouldn't get in a big hurry to be short in the market unless we start breaking pre-market lows. Okay, guys, that's my main takeaway. Thanks a lot for listening, and I will see you trading.